Hello and welcome everybody to today's Commodities Corner session presented by myself, Phil Carr at the Gold and Silver Club. So today's session will be covering live market analysis, a complete watch list of trading setups and opportunities. We'll go through a forecast of where commodities are heading right now, how we expect the markets to move, and of course we'll be answering questions and providing live support. So as always, if there are any questions at all, do keep those coming in the chat, guys. Contributions are valued, so feel free to ask any questions. And before we get right into it, here is a quick disclaimer, which I'll give you a few seconds to read, and then we will get right into it. Okay, perfect. So let me introduce you to the Gold and Silver Club. So the Gold and Silver Club, for those of you that don't know, I'm sure a lot of you do know already, the Gold and Silver Club is a #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading and as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, Wall Street Journal, and of course it's a pleasure to be here on binary.com today as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegollandsilverclub.com. Okay, good. So we will get into it, guys. We've just had the US non-farm payrolls, which have just come in over the last hour and a half. And the US payrolls, they beat expectations today. So the average hourly earnings were slightly above forecast. So we came in at 0.3% versus 0.2%. The unemployment rate had slightly increased versus expectations, but stayed the same as last month. But the big move on the markets was that employers in the US, they added 255,000 workers in July versus 180,000 forecast. So what have we seen as a result? We have seen the US dollar index break out. We have seen a bit of a pullback here on gold. Gold has pulled back in the region of $20, is currently sitting at 1,340 US dollars. We've seen silver pull back as well, but they've come back to essentially major support zones. And the US payrolls is definitely something to bear in mind as we come into the close of this week. However, yesterday, I'm sure a lot of you will be aware that the Bank of England cut its interest rate for the first time since 2009, which is very significant. The Bank of England cut their interest rate for the first time since 2009, lowering their main lending rate to a record 0.25% versus 0.5% previously. What does that mean for the UK? What does it mean for central banks around the world? Well, essentially, the UK doing that, reducing interest rates, means that for those of you who might be savers, you might have money in the bank, you will get less of a return, you will get a smaller return on your savings in the bank. So that's been reduced from 0.5% to 0.25%. What does that mean for commodities? Well, essentially, gold and silver become more lucrative as a result because you are no longer going to be earning such a good interest rate in the bank. You're more likely to diversify your portfolio. And what are the best performing markets of this year? They're the commodities, and in particular, they are the metals. We'll have a look at gold, silver, platinum, palladium, what they've done very shortly. But this bodes well in the longer term for the metals and other commodities. Also, the Federal Reserve is much more unlikely to actually go ahead and increase their interest rate, given that the Bank of England has now gone ahead and reduced its interest rate. Although they will talk about it, it will be on the table, it's very unlikely to go ahead in our opinion. So at the beginning of the year, there were 4 interest rates that were predicted over 2016. We've not seen any interest rates so far this year. We're now heading into August. The non-farm payrolls today will stoke speculation that the Federal Reserve is in a stronger position now to go ahead and increase their interest rates. But it's still very unlikely, although there will be rumors, they will suggest it. It is unlikely. It's the only tool that the Federal Reserve has at the moment to really keep the US dollar strong and also to see pullbacks on commodities. But it is unlikely that an interest rate will go ahead over September FOMC or even the December FOMC statement, given that the Bank of England has reduced their interest rate. We've seen this in the European Central Bank and also the Bank of Japan. So you just need to bear that in mind. And where you can see this most significantly is actually in the performance of commodities over 2016. So have a look at the following. Silver is up 45% this year. Platinum is up 29%. Gold is up 26%. Palladium is up 25%. Soybeans is up 23%. Sugar is up over 23%. Cotton is up 16%. In fact, cotton broke out again today to 2016 highs. Soybeans is up over 12%. And you can see the list goes on. Oil is up over 5%. So essentially, right now, we are still seeing very strong demand for the commodities complex. Now, we have actually got a correction today on gold and silver, which I want to talk you through. Over the course of this week, we did see gold break out to 3-week highs. It actually came within a $10 move from just yesterday, actually, towards the close, from breaking out to 2-year highs, and that would have put it up in the region of 29% so far this year. We've seen profit taking this week. The US non-farm payrolls have come through, giving the US dollar a lot of strength. So we're just seeing some additional profit taking on the metals at the moment. So it's a good time to be on this session today, because we'll talk through some of the trade opportunities that we can see lining up as we head into next week and as we progress throughout August here as well. So our portfolio performance over the last week, one of our top trades amongst other trades which we've got running at the moment has been gold. So we got into a nice breakout trade, $1,340 per ounce, just for the price to close higher. This was a trade entered on the 29th of July. We've continued to have nice follow through over the course of this week. Gold has continued to hold on to around the $1,360 per ounce zone over 3 days in a row, closing near that level. So it's been a nice move this week for gold. Now, technically speaking, we have got a corrective move today. We're back at $1,340 per ounce. I want to talk you through that. We'll look at two types of trades. So we'll be having a look at, first of all, the higher and also the lower. So essentially, if you select a higher, you win the payout if the market exit price is strictly higher than the entry price, and if you select lower, you will win the payout if the market exit price is strictly lower than the entry price. This is good for a number of reasons. One, you don't need a stop loss on this trade. You just need to be able to predict the direction of the market. You don't need to have a profit target on this trade. So you can just get into a position and then allow the trade to run its course. And this also enables you to take advantage of smaller moves in the markets. You don't need to see 2, 3, 4, 500 point moves in order to gain. You just need the price to break out and close 1 point above your entry price, which can be quite nice, particularly given we've had a few pullbacks just today off the back of non-farm payroll. So with that, I will move over to the charts, guys. We'll go over some live technical analysis and trading. Just need a quick confirmation that you can see my screens okay. So hold on 1 second as I bring you over to my screens. Okay, good. So you should be able to see right now I'm on the gold market, guys. So just a quick check-in. You can see my screen okay, and the sound is still working okay as well. We are currently on the gold market. Yep, perfect. Thank you, Sharice. Okay, brilliant. So, right, let's just get into it, and we'll move over to a few other markets as well. First of all, US dollar index. We need to just have this on the radar. So the US dollar index, off the back of non-farm payrolls, it broke down significantly last week. We broke down off the FOMC statement, also the Bank of Japan last Friday. The stimulus package that they put out to the market was not what was expected. So with that, we saw the US dollar break down significantly. However, non-farm payrolls today has quite clearly caused a breakout to the upside here on the US dollar. It's whether this will follow through as we go into next week, and it's whether it will continue to close near its daily highs here. That has put pressure on gold. You can often see the strongest correlations on major news announcements like this. It is interesting that we've just come up and hit a major moving average, which is the 21-day moving average. We've just hit that level, which is a level I would have expected. the US dollar to hit after it continued to follow through today, and there's quite a lot of overhead resistance here. So what I'm watching over the course of this session is whether the US dollar can follow through or whether it starts to roll over and break back down again. Now we move it over to gold, and you will note, of course, that gold has come right back to a major trend channel. And this is an area where you will very likely see buyers come in at the moment. Now, I want to see if 1,340 US dollars, whether this level does hold. You can see now actually we're starting to develop a pennant formation, which will be quite interesting actually as we head into next week if we hold on to 1,340, consolidate, and then if we were to breach above that level, you've got really clean air for a breakout towards 1,380 to the 1400s. Very clear trend line. You can see that on your chart. Nice supportive layer, weekly pivot, also 21-day moving average at that zone as well. This is certainly a buy zone if gold can hold on to this level. You need to break it down into a tighter time frame here and see what gold is doing at this zone. So you can see we're getting a bit of a rejection at this level at the moment. It's consolidating around 1,340. It is worth noting because we could, if we hold on to this level, end up with the price holding that zone, and then into next week, this provides quite a nice buy, particularly if it gets bid up during the rest of the US session. So this is where we bottomed in just before Brexit. We came down, we tested 1,250 US dollars per ounce before we rocketed over Brexit. This was the non-farm payrolls going back to the beginning of June, where we rocketed here with gold as well. US dollar broke down, and also more recently, we broke out on the FOMC statement. So you can see a number of times we've tested this trend channel. So there will be a lot of traders looking to load up on gold around this level at 1,340 US dollars per ounce. Offers a pretty good risk to reward at this level, and of course on binary it's perfect because all you need to do is get in for a swing trade for the price to close lower, either by the end of the day or by the end of the week. If this level holds, it is possible that if gold breaks and close, if it maintains this level into the close, if it just does not get bid up, we're not seeing much buying over the course of the Asia Pacific session this week, and it does leave gold vulnerable to a potential correction a little bit lower down towards the 1320s. It does depend whether this level can hold, but I do expect buys to come in again around the 1300s, particularly given that we're in August, and August historically, seasonality-wise, is a very strong month for the metals. We've already been very close to the 2016 highs and essentially two-year highs as well for gold and silver. Traditionally, you see imports start to build up as we get in Asia, as we start to move into the wedding season in particularly India. You've got a number of festivals as well where gold is gifted, it's imported, and then you start to get increased China demand as well. Also, Asia like to buy dips. They don't like to buy at the highs. They like to buy on pullbacks. So it is something worth bearing in mind as we go into next week too. So we've got a pennant formation which is in development here, and this could lead quite nicely into a setup as we go into next week. So first of all, I'll put that on your radar with gold. Silver, also look at how it's come back down to a trend channel. It's just dipped lower today, found underlying support right now at $19.80 per ounce here. You've definitely got some strong underlying support. I would look for this level to hold as well, or certainly you've got a lot of underlying support at $19.20 per ounce here too. So I'm watching both of those markets carefully. US dollar, if it can't get much higher than the daily highs here, especially if it was to develop a rejection candle or inverse hammer into the close, I would then expect that to start to roll over and then start to break back down again next week, and that will provide support for the metals. Also, I'm watching oil carefully here as well. For those of you who know what a V-shaped reversal pattern is, we do have a V-shaped reversal pattern in development at the 50% Fibonacci level. Oil managed to get back above its 200-day moving average, and you've also got a nice level to break out from just overhead here above 42. So I am looking for that potential development in oil. You've also, have a look at the weekly chart. You've got a pretty nice hammer developing on the weekly chart here as well, where we could see oil start to bounce and move higher as we go into next week. So oil is definitely on the radar now as we go into the close of the week. I'm watching to see if we can break out above 42 US dollars and potentially get some good follow through here. So just have that on your radar as well for oil. It's not quite ready yet, but it's getting close. I could see this. You've got clean air here for a break from 42 up to 43.60. That's a $1.60 move here for oil. So I'm watching that really carefully as well. Now, we've also had corrected pullbacks here, which is no surprise given the US dollar strength at the moment on both platinum and palladium. They've had runaway moves over the last month here. So July has been phenomenal for platinum and palladium, both pulling back a bit off the non-farm payrolls. No surprises really there right now. But if we move over to gold, I'm going to go for a swing trade position here, where essentially we're looking for gold to close higher by this time next Friday. It gives the trade enough room to just consolidate over the next week. If it needs to break down to 1323, it can break down to that level and get bid back up as we head into next week as well, once we come back down to the critical level of support around the 1300s. You've certainly got a lot of underlying support at that level. Given that the fact that the Bank of England has just reduced the interest rate here, I wouldn't expect the precious metal markets to suddenly completely break down at this level, especially given that the fact that the US dollar GDP numbers were very poor actually last week as well. You had confirmation from the FOMC statement that they're not going to go ahead and increase interest rates at the moment. So right now, I would expect moves to the downside for gold to be short term, and ultimately I expect much higher prices by the end of this quarter for gold. So it gives us with quite a nice opportunity here to get in at a better price rather than entering gold right at the highs here. So I'll talk you through exactly what I'm going to do here in terms of this gold position, and it is going to be, I'm just going to see how far I can get out here in terms of days right now. I just want to close by next Friday, which is the 12th of August, close higher. So you can see I'm getting a better price at the moment as gold is coming down a bit, $1,337 US dollars per ounce. Okay, so let's go ahead. What I will do, just refresh my deal ticket here. Okay, good. So let's look at the payout on that. 85% payout, that's pretty nice. Okay, good. So 1,308 US dollars a strike zone. So I will go ahead with that. Okay, so I'm going for gold. The payout on that is going to be $2,000. Deposit is $1,077. I just need the price to close higher than $1,337, and around, you can see it's changing there, but $1,338 US dollars more or less by this time next week. That gives this a swing trade, gives the trade enough room to breathe, allows for volatility over the next week. Ultimately, I'm looking for higher prices on gold and to take advantage of August seasonality as well. So I'm going to go ahead and purchase that $1,077 US dollar deposit for a $2,000 payout. Okay, perfect. So that has been executed. I'm just going to mark that off on the chart there as well. We can come back to that next week too. So that has been entered into 1,338. Remember, it's a swing trade. A swing trade is defined by a trade which will essentially be overnight, going through the Asia Pacific session, going through the UK session, and also the European session. I do expect pullbacks to be bid back into. The momentum today is the overall sentiment is bearish right now. We can see a little bit more downside possibly, but I do expect gold to get bid back in towards the close today, and certainly next week we've got a really nice supportive zone. We might just break through this ever so slightly and retrace back again, but this is a point where I would expect buyers to come back into gold at the moment. Similar situation on silver here as well, guys. Right at the back, lower end of this trend channel, I do expect support at this zone as well, but I would give the trade enough room to breathe. US dollar index right now still holding on to its daily highs. We'll watch this very closely into the close today as well. Platinum and palladium, no real trade opportunities on those at the moment, but I do expect those to continue to pull back in the short term here because they've had such runaway moves over the month of July. Palladium actually over the month of July was its best performance in over 8 years, this move that we had last month. So corrective pullback is due, but I do expect pullbacks to be bought into. And just keep an eye on oil at the moment as well. A break above 42 US dollars per barrel. I'm looking for a short term opportunity to enter long for a breakout. There's a number of points of confluence at that zone. 50% Fibonacci level, also sat around the 200-day moving average too. So I'm watching that very carefully indeed. Okay, fantastic. I'm just going to check in, guys, on any additional questions at this point. And Therese, if you've got any questions there from the audience, do let me know as well. Okay, perfect. Thanks for that, Therese. Okay, great. So with that, I'll just take you back to the main presentation, guys. That's really what we're looking at. That gives you a bit of an update of non-farm payrolls and also of the decision by the Bank of England as well. We get asked a lot how you can get access to our trades throughout the week, not just during these commodity corners, to get access to our commodity analysis, our live trade ideas shared with you, ready to implement. essentially the quick way is all you need to do is go across to www.jointhegoldandsilverclub.com. Membership is by application only. Complete the enrollment form and we will get in touch with you ASAP. Okay, so you will get access to all of the trades that we are taking, and you will get access to our live trading rooms, our analysis. I'll go over that in more detail with you very shortly, guys, but essentially the quick way, and I'll just put that in the chat for you as well, to make an application is just go to www.jointhegoldandsilverclub.com to become a member and get access to everything. Okay, perfect. So what does membership include? Okay, so let me talk you through it. By being a member of the Private Members Live Trading Room, you get access to the following, okay? So you get access to our live trading room webinars. So you can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, pick out highly profitable trade setups, share exact entry, exit points, profit targets, stop losses, as well as walk you through live trade ideas ready to implement. You also get access to our trade notifications, that is by email and SMS, so you get real-time trade notifications which alert you to our entry on a trade. You get kept updated with our trade management when we exit a position, any updates with regard to reminders of when you can get into trades. You also get continuous updates about our trade management. So if we're extending our trades for longer durations, for swing trades, for longer term trades, all of those are sent out in advance notice to ensure you have plenty of time to get into every position at the best possible price. You also get access to our research, which is really important. So our commodity research and market insights. So private members get exclusive access to our proprietary trading research and market insights to help you boost your win rate. So that really helps to put you on the right side of every trade. So we've shared some research with you today, but we go a lot deeper on that, and you can get access to all of that by being a member of the Gold and Silver Club. Our trading research is really guaranteed to give you the ultimate edge when you're trading the commodity market. So essentially, the private members live trading room includes the following. You get exclusive weekly live trading room webinars, live trade setups ready to implement, real-time trade notifications by email, SMS, so you don't miss any of the profitable trades. You get exact details of where to enter, exit, place your stop loss. You get a weekly trading plan with a watch list of our trader ideas for the week ahead, live trade support to help you successfully through each trade, institutional level trading research and commodity insights to give you the ultimate edge in the markets. So again, all you need to do if you are ready to really take your trading to that next level, there's a number of great opportunities coming up over the month of August as we transition into the following quarter here, particularly off the back of the Bank of England here. The fact that they have now reduced interest rates is huge because this puts the USA and the Federal Reserve in a very tricky spot for them to go ahead and increase interest rates as well. And you have to remember, one of the main reasons for commodities breaking down so significantly over the last year, particularly going into December last year when they broke down to 4- and 5-year lows and oil broke down to 12-year lows, was off the back of the Federal Reserve increasing interest rates. If that's no longer going to be on the table, if the Federal Reserve are now not going to increase interest rates, it would seem very unlikely, even though they might suggest they do. Off the data from the non-farm payroll, it's still very unlikely, given that around the world, other central banks are reducing their interest rates and even going to negative interest rates, and now they're doing quantitative easing. So if America does quantitative easing, that is going to rocket the commodities complex. Remember, the top performing markets this year, silver up 45%, gold is in the region of up 25%, palladium and platinum have had similar gains. You don't want to miss what is going to happen between now and the end of the year. You've got the elections in the US as well. You've got more stimulus, which is very likely to come out of the Bank of Japan, which is going to be over the month of September. There's a major announcement on the 21st of September. The European Central Bank on the 8th of September is also due to come out with another statement. And really, it's an amazing opportunity right now, in my opinion. So if you do really want to take your trading to that next level, you want to make, if you're not making money in these markets right now, you absolutely should be. I hope a lot of you guys are just from the back of these sessions, but if you want to get more access on a regular basis, join us at the Gold and Silver Club. Really take your trading to that next level and just be ready for what is to come at the moment with the financial markets, particularly the commodity complex. Again, really look forward to hear from you guys. We very much look forward to working with you at the Gold and Silver Club. Just drop us an application and we'll get in touch with you ASAP. Okay, so with that, I wish you all good trading, guys. Have a fantastic weekend and very much look forward to hearing from those of you who will be joining us at the Gold and Silver Club. Okay, thanks, guys. Have a great one. Thanks, Sharice. Thanks to Binary.com and the team today. We'll speak to you all real soon. Take care, guys. Bye-bye.